What are the roles of the World Bank? The World Bank is a group of financial organizations whose purpose is to develop member countries' economies and to reduce or eliminate poverty throughout the world. It is recognized internationally as the world's apex bank that is helping emerging markets and developing countries. What are the roles of the World Bank? In summary, its goal is to bridge the economic gap between rich and poor countries. The history of the World Bank highlights that goal. It was established by the 1944 Bretton Woods Conference following the devastation of World War II. European countries and others involved in the world were in dire need of rebuilding and reconstructing of their countries and economies. That brought about the idea of the first multilateral development bank in the world. How would the World Bank get funds to perform its roles and achieve its functions at the onset? The funds came through the sales of bonds. France was among the European countries that benefited from the loans. The bank continues to provide long-term loans for developmental projects and economic support spanning 5 to 20 years. Let's now get down to the main roles of the World Bank. From all that has been said earlier, the roles or functions of the World Bank can be categorized as follows. 1. It provides technical services and support to the member countries in various forms. It does this through the activities of its various affiliated financial organizations, Multilateral Investment Guarantee Agency, MIGA, International Center for the Settlement of Investment Disputes, ICSID, and International Finance Corporation, IFC, the Economic Development Institute and the World Bank Staff College in Washington. The Economic Development Institute and the World Bank Staff College in Washington were established mainly to help in providing such services. 2. It provides downloadable data on major economic indicators to advise about 200 member countries through the IBRD under IRD by analyzing the Annual World Development Report. These indicators include climate change from the study of the environment and energy, health issues such as life expectancy, labor, income, and education, demographics, poverty, gender, and aid effectiveness, urban development and infrastructure, government economic policy and sovereign debt, business, agriculture, and financial. These and many more are found in publications such as the World Development Indicators and Global Development Finance, the Little Data Book, Little Green Data Book, and the World Bank Atlas. 3. It also grants loans to member countries to shore up their economy and aid infrastructural development. The bank determines the amount of loans and interest rates in addition to other terms and conditions applicable. It analyzes projects duly submitted to it by the country applying for the loan. Such countries have to repay either in reserve currencies or in their currency. Still, on loan matters, the World Bank supports private investors from member countries on its own guarantee if the bank is convinced that the loan will be used to create jobs and facilitate economic growth. One key condition is that the private investor must get the approval and obtain a recommendation from those countries where the project will be executed. Yes, the World Bank has been criticized by economic activists. What do you think about the role of the World Bank and its discharge? Please let us know in the comment section below.